Hi, thanks for joining me on my market report. My name is Mike, and this market report is on mortgage rates. We get into what's impacting mortgage rates on a daily basis, whether it's something from the economic calendar, if it's headline news or geopolitical. Sometimes it's simply a sentiment, change in sentiment, where good news is bad news and vice versa on the markets. So people who are on the outside might be out there looking like, why is this doing this? It doesn't seem to be rational or logical. And well, we're here to kind of give you an explanation behind what's going on. And if you guys are looking for a refinance or purchase, you guys are probably looking at rates and seeing where they go. And these videos that come out on a daily basis would be a good point of contact as to giving you that information, whether if it's a good time to refinance or a good time to lock in a rate or perhaps hold off a little bit. So hopefully, again, you'll get that information. A little bit about myself is I am a loan officer. I do work as with the national lender, so we can do loans in all 50 states. If you got questions regards to programs that are available out there, or rates, or if you got or just anything in general, please feel free to reach out. We're here to assist you in any capacity. We would love to earn your business in terms of a refinance or a purchase, so please reach out with us, and we can go over with how we can best serve you guys. In the meanwhile, why don't we just jump right into today's report? We'll start with today's economic calendar. We'll start with the day two of the jobs numbers we were talking about, and that is the initial jobless claims we get every Thursday. So last report initially came out at 281,000 people applying for unemployment, and it was revised slightly to 283,000. Forecasters calling for a dip of 275,000 and exceed that down to 269,000 people applying for unemployment. So we're seeing lower and lower people applying for unemployment, which is obviously good news. However, as I indicated before, is that people who are being forced out of the work due to vax mandates and aren't doing it, these guys aren't going to be applied to those numbers. So we won't know how much of an impact that could be potentially if they don't, if they're not reporting it. So we may see that tomorrow in our labor participation report, but we may not see it since it's relatively new. We might have to wait another month on that to see how much of an impact that could be having. However, if you look at the Challenger layoffs, these are announced layoffs, and it jumped from almost 18 million at 17.895 all the way up to 22.822. So that's basically 5 million people announced layoffs coming up. So that's obviously not good news there, and that could be part of this vax mandate where people are just being laid off because they're not willing to go ahead and get vaccines. Now, continued claims on the numbers had to drop about 100,000, so that's good news there as well, that people are coming off the unemployment line. Now, we got the preliminary Q3 labor costs for the third quarter, so this will be a preliminary number. Our final come in December. So the second quarter came in at 1.3, however, it did get revised slightly lower at 1.1%. However, for the Q3, forecast cost 7%, and it skyrocketed to 8.3%. So labor costs went up dramatically as we've been kind of seeing that we're getting a lot of wage increases going on right now, and that's part of the reason why a lot of people feel that inflation's here to stay, because you're not going to come back to an employee and say that, well, we're going to lower your wages. Well, that's not going to be acceptable. So we're seeing a lot more to get people back to work. They're having to increase wages to get people to come back to work. Now we also, last but not least, we got the productivity report for Q3. So initially for Q2 came in at 2.1. However, that did get slightly revised higher at 2.4. But something we don't want to see is a negative. So we had a drop of 3% forecast, and it well exceeded that 5% drop for productivity. So that's obviously not a good sign that we saw a huge drop in productivity here. Now, headline news, basically people are investors kind of reviewing Q3 earnings reports, which is kind of driving the markets. Dow is down a little bit, where the other two were still in positive territory. But they're also kind of reviewing the Fed release, their announcement yesterday when they gave that. So they did announce the taper. It will begin mid-November, so it's going to start immediately. It will start off with $15 billion each month reduction. So it'll be reduce 15 billion this month, and then next month it will reduce another 15 billion until basically to zero. But they did say that if things change, circumstances, that they can basically edit that and figure out that they can continue increasing or lowering it, but depending on where the current environment. So they're tying the interest rates. We talked about interest rate hike to the jobs numbers. So we'll have to wait and see if they hit the jobs I'm looking at, and that's going to be tied to that of the rate hikes. And a lot of people are projecting that it got moved up sooner because of the inflation, that we could see it potentially by mid-year next year, the first rate hike, maybe around June time frame. So that's something they'll keep their eyes on. So let's take a look, see what's going on with mortgage-backed securities, see what's going on with rates. As you saw here yesterday, it did drop below the 25-day moving average. However, today it's shaking that off and coming backwards, which is obviously good news. We're up about 33 basis points. So we made up all the loss we had yesterday, and now we gained some more, even from the day before. So now we got some improvement in our mortgage rates today at 33 basis points. So we're up here. From here to here is up 33 basis points, and we're back above the 25-day moving average. And here's how it looks today. So we kind of start off lower, and we worked our way up, and we've been kind of pretty much in the sideways pattern, slightly down and back up again, as you can see here on a daily basis here. And then if you look at the treasuries, we'll take a look over here in a minute, just 1 second. Let me get that kind of revised back. Treasuries here also broke below the 25-day moving average. See, yesterday we broke above the technical level and 25-day moving average, testing up here close to 160 range. Today we're down to about 1.5. Well, right now it's 1.52. Earlier it was about 1.53, which is good news, and back down below and testing its next technical floor here of support, which is good news for that of mortgage-backed securities, which is adding less pressure and allowing us to see some improvement in our mortgage rates as a result today. All right, folks, and then last but not least, let's take a look at the national average for rates. 15-year fixed at 2.55 right now, and the 30-year is at 3.17 right now. And what those means is that we do have points added to those, so they do have the absorption of mortgage rates, and these are based on conforming limits. Again, these are just national averages that's out there, and so every lender should be pretty close to that on there. And again, these do include points in there. Hopefully this will give you some insight as to when you're shopping around for rates, give you an idea roughly where rates are at. Now we typically will close at 1/8 of a point, so that's why you'll see like in this one 3.17. Typically would be like 3.125 or 3.25 in eighth increments is kind of typical what we'll see. But you're seeing that because we kind of points are added to that, and that gives you kind of an average, blended average with the points added to it. All right, folks. If you guys got questions, please feel free to reach out. We'd love to be able to talk with you guys. If you guys like these videos, please smash that like button. Help us out. Help the channel out. Follow us. We're here to help you guys as much as possible. We'd love to earn your business. So again, we love to hear from you guys. Thanks so much for watching. We'll look forward to seeing you in tomorrow's video. Have a great rest of your day. Bye bye.